let's take a look at the trades I made during this past week, March 1st through March 4th, which was a Friday. So from Tuesday through Friday is what I'm going to review today. So today is actually Saturday, March 5th. And the idea is that I'm going to show you for the three markets I trade, what I did. So ES, the S&P 500, GC or gold, and also crude. It's been a very volatile week, and I did not make that many trades, and not all of them were uh, 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 profitable. So probably it's a good learning experience for you, and also for me as well. So before I start the review, let me share with you a couple of links or a couple of yeah, actually links that I have, and probably you can review and take advantage of that. So the first one is the Monday video. So on Monday I made $507, and I created a list, a playlist in YouTube that it's called Monday, February 28, 2022, plus $505. So there are three videos there. Two of them are profitable, and one of them is for a loss. So in total, I made $507 on Monday. Um, so you can go to my channel and click on the playlist, and you will have the three videos there. The other one I wanted to share with you is the in my channel. If you go in the upper uh, right corner, there is a button to donate. So if you want to contribute to this channel, I would appreciate only $1. It would be fine. You can donate in that link in the banner. The other one is in the description. There's a link in that takes you to Apex. So as you probably know, I trade with Apex, and this is a free risk. So there's a discount there. If you use that link, you can use the coupon, which is 50% off of your membership. So that is a good alternative. And the other one, if you go also to the description of the video, you will see that there's a link to a blog that I normally update almost every day. I don't do it as regularly, but I try to put information about how the market is behaving and all of that. So let's get started. I'm gonna start with ES. So what you see there is what you see in front of you is the S&P 500. So let me bring another chart that I think that it's very interesting, um, which is this one here. Let me detach it. Give me 1 second. So I'm gonna detach this one, and I wanna bring it to here. Okay, so this one is Think or Swim. You'll see that there's a couple of indicators that are very interesting here. The one that I follow is the market forecast for this one is for ES. So you see that market forecast now is 4470, and it's moving to the upside. So that this is a bias that is telling me that the market may be moving in a bullish bias, right? So let me expand this a little bit to 1 year. Probably you will see a little bit better what's going on. So here it touched the 20 and then moved up, and then the price follows there. These blue lines, horizontal lines that I have here, are the range for the first day. So if you see March 1st, which was the Tuesday, you see that the high price, the upper price there was 43.99, and the lower price was 42.75. So this is the range 4400. So I was expecting actually this day, the last day on Friday, that the price would move above this 4400, but it actually retraced. So it is still in the range. Market forecast is moving to the upside and flattering a little bit here. So there was not that much difference in between Thursday and Friday, which is a concern because this one could come down. It was a range day from the point of view that it's in between the opening day range for March, and this is what I keep in all the in the three markets I trade. So if we go here and look for gold, so gold, you see. Um, the market forecast is actually in the upper moving to the upside, so and it's followed um, uh, or the prices follow in synchrony with this, right? So let me paint that trend there. So this is a trend line that it's moving to the upside. There's also a horizontal line that we can see from this day here, and it's moving up. So price is bullish in gold, and as probably everyone knows, and there is a good opportunities to go bullish there in this side. So we'll see what happened in the price, but in the price during the week. But if you see here on March 1st, I also have a range day or the price, the range price for the first day, it was totally bullish, and then gold keeps moving up. So my bias in gold is still to the upside. In this case, is a difference with ES. This one broke to the upside and keeps moving higher. So this is MFC, and this one is the money flow indicator, which is also in the bullish area. So I expect that this one would stay above 80, and then at some point it's going to come back. As you see, it comes back here. So like in this case as well, was moving down. So when it crosses the 10 days moving average, which is this green line here, then you will need to be concerned because it normally what it's going to try to do is to come back to the yellow line, which is the 30 days. The last one is crude, that you may know that it's also bullish, so CL. And in this one, the opening range day was in between 95.32 and 106.78. So this one also has been in the oversold area. It could, stay for a long time in this area. Try to come back, and then moved up. Same here um, with the money flow index. Try to come back, try to go down, but then found some resistance right at the 30 days moving average, and then started to go up again. Right now is $115, and very bullish still. So those are the things that I look. I look at the volume. I look at the market forecast to get the bias on what the market should be doing in a specific day or movement. So trend here is to the upside, and may keep moving upwards as well. So a good stop would be probably, or a good change of bias would be below 106.78, and then to do some either bouncing or to change or to reverse the trend. Okay, so let's go back to the to NinjaTrader, which is this platform here. You see that there's just 1 second. Let me move this one out of the way. I do have 6 monitors here, so I have to make sure that I looking at I position these charts in the right way. So okay, so here I have ES, and you see that I said that I was going to check from from March 1st, and this is the first day here. So um, so March 1st, I made 4 trades in ES, and all of them were negative. So I lost money in all the trades. So let's review that one there. So this is the whole day. You see that the market is moving down. Well, you don't know until area here, right? I'm looking at the top right corner. Let me top left corner. So let me expand it a little bit here. So in this area, let me move it if I can. Let me move it to this side here. So you see here that the market has been, it was bullish overnight, you know, and then came back down. So made a significant pivot high right here, and then a significant pivot low right here. So let me mark it there. So here is the mistake, the probably one of the first mistakes I make. So if you see here, there is a significant pivot high, then came back down, significant pivot low here, and then try to move to the upside. All the moving averages are moving to the downside, and then made like a this pattern, which was a kind of like a reversal pattern right there, right? So off of this pivot low, then probably we can move this one a little bit to the downside. It doesn't matter that much, but this is a new low, and then it came back up, and then came back down, and then broke to the upside, still within the cloud in the higher time frame. This is the anchor chart, so that is why I call it the higher time frame. But it's actually the anchor chart is not time related; it's Renko. So then market is started to move in this area here, and the idea or what I should have been thinking is that this was going to move and break either this area here or this area here. Sure enough, it came back down, and all the losses I had were in this area where I thought that it was going to go to the upside, and then I thought it was going to go to the downside, and then again, and so that is where all the trades happen. So 4 losses in ES. So let's review one by one. Okay. Let me open this area here. And move it a little bit. Probably that's good. Okay, so first mistake. So came back down. Was moving to the upside. This one was probably a good entry, right there. Probably not talking still with the higher time frame. So you see here that it's not in sync with this one. And then it came back down. So I was kind of like in this area was not very clear what was doing, and then it came back down. I am still in this area, so everything here is riskier. So came back down, made a pivot low out of this floor pivot right here, which is the blue line. The blue line is a floor pivot right there, and then started to move up, then came back down and make this weak. If you see here, let me open it a little bit more. So at 20 at this price level, 43, 48.75. The price in this area made this a low, and then painted a bullish candle. So this is a week out of the moving average, which is the 30 and the 21, both at the same time. So, and then I entered the trade right when this candle closed, when this brick closed. So, and then the price moved up and then came back down. I gave it a little bit more space, but I was not feeling sure. Not, normally, I would sell it right at that price, but I let it go for a couple of more ticks, actually like three or more ticks. So this is $150 loss right there. So the difference in between, let me read the price correctly. 43.55.25 and 43.52.25. So bought it up here and sold it down below in this area here. Second uh, second break actually. Okay, so that one is $150 loss. Now let's move to the next one. So probably a good entry would have been breaking this one here, but it's still very choppy. If you see, you take this one here, go up, comes down. This is very annoying. Then try to go back down again, doesn't do it, and then go up again, and then doesn't do it. You can be chopped out pretty bad in this area here. If you take this one, there's a loss. If you take this one is actually a break even. If you take this entry here, is a winner all the way down. Okay, I didn't take it. So after made a move, and this is another I don't know if call it error. We were below the pivot and bouncing off of the pivot. So it was reasonable to take a trade right here. I did, and it was a loss. Okay, second loss right here. This one was for $237. So I took it right here in this entry in this second red candle, and then immediately went to the other direction, right there. So I was stopped out um, at the 30 SMA, 30 EMA, the 30 days moving average. So then I try again, but a little bit too late. So the a good entry, if I wanted to try again, I would take it right there. But it took me a while to react, I guess, and I took it right in this candle right here at 43.75, 43.30.75. So so then this one came back down, didn't meet any target, came back up, and I was stopped at this level here again. So this one was $175 loss. So I should mark those, right? Let me do it real quick. So this one was minus 150. Then this one, second one was minus 237, and then the other one was minus 175. Okay, I guess that I moved it a little bit too much. And so right now I'm at $562. Probably enough for me to stop, but I wanted to give a one more try, and I did. I entered it at 43.28, 25. And why I did this one? Because it was another bounce off of these moving averages. Moving averages are still stuck to the downside, and one of them would have been. I should, if I didn't take it and then move down, then well, um, I would be regretting it, right? So I took this one here, but immediately, went a couple of ticks below and then came back up, and I was sold at or stopped out at 43.32.75. So that one is another $225 loss. So let me mark it right here. Minus 225, $225 right there. Okay, so $787 loss in plus commissions, right? So I paid some commissions on this one, but so that was not a good experience with ES. ES was very choppy in this area, and then finally, look at what happened here. So this area here, 43.20, you see that there's a double bottom, kind of a double bottom here, and then there's this level, which is this one here is actually the Darvas indicator. So it was made a move, went in the choppy zone. I made the 3 trades for a loss, and then finally here it broke at 11:30. 11:30 is a little bit too late for me. I don't trade. I try to make all the trades in the morning before 9, before 10 a.m. This time as I was kind of like, okay, so this one I didn't follow very well the the rules in this case, because I was still in the danger zone, which is in between the pivot high and the pivot low on the overnight. But anyways, this one was a great move. Um, you see here in the upper right, in the upper left corner, you see that this is where at 11:30 is when it broke, and then made a nice move, painting another significant pivot low, and then coming back up, and then made another attempt to break, and then come back come back up again came back up again in the afternoon. So so bearish in this area. This would have been a couple of nice trades. I didn't take any of this. Then at if you see here, another bounce off of the 200 moving average up here. This is the blue or CN line is the 89. So you see that there's congestion in this area. This is a counter trend trade. I'm not taking. I don't recommend to take that one. Those sometimes you get some good profit off of that, but there could be either if it moves, could go straight up, but most of the time does this, right? That goes in a choppy zone. It finds a lot of resistance. People that were in this move here, trying to get their profits with, and then selling at this area, so create some choppiness in this area. So that is a problem with counter trends most of the time. And then they made a bounce and resumed the move to the downside. There's no really entries here except for this two. Let me expand it also a little bit here so you can see it better. So this one is tough because it's at 11 at 114, but it was a nice move to the downside. There's a couple of weeks here that are kind of together, and but still bearish. So there's an indecision here, trying to move up, but you know, sellers won and then moved to the downside finally. So that entry could have been a valid one because of the 2 weeks. And then because all the moving averages are stuck into the downside, and also we are below the Ichimoku cloud. Then there was some congestion here, right at support one in the pivots. So some good congestion here. So this area is kind of like, in between 130 and 230. The market was chopping and killing people like crazy. Then uh, moved to the upside. 4,300 was kind of like an important level from my point of view. So 4,400 and 4,300 are important levels. Let me get back to the ES in my other chart. Let me check one thing real quick. Yeah, so let me go back here. Okay, so you see 4275 and 4399. So 4400 and 4300, 4275 are kind of critical levels. So if it's here breaking down to the breaking 4275, this would be bad for the market. And if it goes above that one, that would be a bullish bias. So bearish bias below this level and bullish bias above that level. Okay, so market tried to go to the downside here, didn't get it, and then move to the upside there. So that one would be, this one here would be a good entry. Actually, out of this cloud, the only problem that is that we have the 200 right above it. But if you see this level here, let me see that level there. That one is a nice breakout. They tried to go up, didn't get it, and then came back down and then bounced. And this one would be a good trade from here to that to there, maybe one target. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, exactly one target there. Um, then came back down, and then another move to the upside to 43.15. So that would be also a reasonable one, probably been stopped out at this area here at 43 1075. Then made another attempt to go up. We are still above the moving average. I mean, sorry, above the Ichimoku cloud, and moving to the upside once again. So the problem with all of this area in the afternoon is that you guys, or the market is not you guys, but the market is actually in a congestion area, trying to move down. All the moving averages in the higher time frame are moving to the downside, so there's no that much, you know, motion to the upside. It's actually more to the downside all the way. I mean, this is choppiness all the way from in the afternoon in the higher in the anchor chart. But in here you see we have also some congestion moving up and then come back down. It's not really clear what was going on. So yeah, I'm sorry, Tuesday, March 1st, $787 loss in ES. So let's go to Wednesday. hmm So let me move this one a little bit. So March 2nd, right? So let me go and put this one here. And there is one trade right when the market opened. You see here in the at 9:29, 9:30. That is when the market opened. Let me take this off, this paint off, so we can see this. It seems that I moved it a little bit too much. March 2nd, right there. Okay, so overnight market was kind of like sideways as well. Some congestion area overnight. Prices moving in the pivot, um, and so trying to move up. Moving averages in the higher time frame are to the upside in this area. All of them are stacking to the upside. So this is a good sign for the bullish. So let's move this one to the next day. So you see here, um, ES is moving to the upside in the overnight. This is 4 a.m. and then there's some congestion here. There's no as there's no clarity on the moving averages after probably 6 or 5 a.m. So market was moving in between this area up here and this one. Let me take this one off, remove. So the market was moving in between this area and this area here. Then it came back down before the market opened. I'm not taking any consideration on any news or anything like that in my analysis here, but just for you to know, I look at those news, or I'm pending on when the news are released. The economic calendars are released when I'm trading. So just for you to know, there could be news in this area or not. I mean, I'm not looking at those now. But the fact is that I decided to enter a trade right here after this week. So we were actually in the pivot, came back down, market open at 9:30. So I was looking at how this one was moving to the upside, and then came back down and did this. Probably a good entry would have been here, right there, in this candle at 43.31.50, something like that, and then it would have been a loss, right? Because I would be taking out minimum loss, but the loss anyways, right there. But I took it right here, and it moved all the way up. So at 9:43, I took this entry, and then it was sold at 43.44 with $400 profit. So that one was a good entry. It was profitable. Profitable. So, and I think that I let it go a little bit, but it came back down to the price that I was willing to sell it in the first place. So I let it run a little bit, little bit, but I moved my stop from from here to there. So I moved the target a little bit to a little bit, because the target would have been maybe, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, in this candle right here. So I moved it up, thinking that probably that this would be a runner, and I think that I moved it to resistance one, mid resistance one, which is R1M. You see it right here. Came back down, $400 profit, so plus $400. Let me see here, plus 400. Yeah, let's put it there. Okay, so then let's go to March 3rd. So next day, which is Thursday. Let me. So that was the only trade. Let's review what happened during that day. So you see a lot of choppiness here in this area. Probably that there's no really an entry in here. Then came back down, choppy, 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 and then came back up, came back down, up, down. Really, really choppy during this day on Wednesday. Then moving up, not hitting any target. Maybe this one would have been a target. But small moves and then come back. Small moves and then come down. This is annoying because you're making not that much of that moves in the Renko unless you are trailing um, the pivots, right? If you put your stop right below this one and then move it up and put it below that one and then move it up and put it below that one and then move it up and put it below that one and so on, then you would take the if you take this entry, let's say, you would make this from 43.52 till that that one here when it broke here 43.65.25. I'm not going to make the calculation, but that would be, you know, not it is not my strategy. I go for a run up to my I'm trading in a one contract, and the I take the profit out when it in the first candle that closes in the opposite direction. So this one is choppy here, choppy, choppy, choppy. Below the previous day high, that is the pH you see there. Also, a lot of choppiness right here, all the way through the end of the day. So it didn't make any other trades on Wednesday. So let's go to Thursday. Thursday, another trade right here. So let me see Thursday in this chart. Thursday is the 3rd. So you see here, this trade was before the market open, right here, from this area to the right there, to that area in the anchor chart. So you see here that there is a significant level pivot and also a pivot high in the or prior high the right there. So this is the significant pivot. You have one attempt and then another one in the anchor chart, and then try to make a run, and then I took that one. So that's why I took that entry, and you see it here. You see that green line. That one is the previous day high. So I took the entry right there. Should have probably taken it down here, but the previous high was right above. So I waited a little bit until it moved. So I took it right there, and this one was good for one target, and I just sold it at 9 a.m. Um, and I sold it at one target, so $400 right there. So from 43.99.50 to 44.09.50. Okay, so I'm gonna mark that one for 400, and I'm gonna put plus. I'm gonna put a plus there because that makes me happy, making money on that one. So let me see here. This is March 3rd. No, actually, this one, yeah, March 3rd. I'm sorry, this is not correct. Properties. This one is actually $500. Yeah, one target is $500, not 400. So my mistake there. Mhm. And so those are the trades. I didn't make any more trades during the day in ES. And again, let me go back to this chart here and see we are in a choppy zone here. So this one is the first of the month, second, third, and fourth, and we are trying to do something here. This one is the third. So look at the price action. Let me expand this one a little bit right here. Look at the price action. It's trying to move to the upside, but it doesn't come back down in this range area. So not good though, not good though. Um, so yeah, I didn't trade that much, or I didn't trade anymore in ES here. Um, but you see, if you look at the anchor chart up here on the Renko, there's a move to the downside here, crossing this, but it still a counter trend, right? Counter trend to the downside, and then moved all the moving averages. There is confusion. They are not stacked either to the downside or to the upside. They are moving and closing, right? Closing the distance in between them. So it's not expanding. It's actually in contraction. Okay. So there you go. You have a good definition of what contraction is when all the moving averages are getting together, and this is not probably clarity on what is going to happen. But the price moved significantly to the downside. So that one, when you have a lower high here, that would be an indicator. If you want to do a counter trend, that would be probably a good entry. Then you have another uh, a lower high, and then you have now confirmation down below here. So this one probably would be a good entry. I do not take this, but um, in the entry chart, you do have some congestion here, but finally you have stacked moving averages. That they are not talking that much with the anchor chart, but they nevertheless is moving to the downside. So you have good entries here. Then congestion, keep moving sideways. Again, contraction. The moving averages are getting together, and then you have some breakout right here, so in a trend reversal. This point here, you see a W right here. This one is a winner. So this one is a trend reversal. Moving averages are stacking, and then you have a higher a downtrend basically, which is that downtrend right here, congestion, and then you have your close above this pivot, right? So that candle right here, let me expand it a little bit so you can see it better. That candle right here, that break will move all the way there, and then this one is closing above this pivot high. So this is a good entry. Then this one is another one again. Let me see what time that is. 12:30. So tough to do trades here because of lunchtime. Um, and you have to be careful on the moving averages stacking or going and closing right here in this area. So there's not that much clarity here. Then moving sideways, there's a range here. It's not moving up, not moving down. It's just moving sideways. So no entries right there. Okay, so that puts us in Friday. So let's go to check Friday action. I'm gonna use that arrow right there. So also Friday was not a really clear day. Let me get it to the right size. Okay, so it seems that market was moving down after a move up on the overnight right there, and then came back down, and then move up, and then came back down, but very choppy. And then this one is actually a counter trend. So let me see why I made this one. Okay, if you see the anchor chart, that one is um, a reversal. What happened in here is that we were at the 43 100 level. So let me go back again. In here, we are at this level down below here, right? So we are in the lower end of this channel. 42.75 is the bottom of that channel. So what happened is that the market failed to break that level. And so I felt pretty bullish on this move when came back up and then down, and actually I entered it here above the 200 moving average. But if you see, the moving averages are not stacking to the upside. They are actually in congestion here, compressing. They're actually in compression. And so I took this trade and I took a gamble. Actually, this one is a gamble. So I took it right there and then let it go in this congestion. And I put the stop below for a 4280. Okay, just because of this other chart that I was showing you. So market came down. Still, we are above the cloud, and then market reversed. And then when it went above my entry price, I started to trail this one and didn't reverse, and I sold it at 43.1150. So entered at 43.0150 and sold it at 43.1150. And so that one was $500 profit. So plus 500, one target, right? Or my target. So with all of that, um, I made plus this, plus this, plus this. $613 in the whole week for ES. Okay, so I guess that I already reviewed the rest. So let's move forward. So entered it there at 12. Actually, this one was even more riskier because it's lunchtime, and so sometimes the market moves during lunch, and normally it is pretty slow, but sometimes make some moves, and this time fortunately made a move, and then came back down, up, down. There's a couple of you know a choppy area right here after this significant move, so you have a significant high and significant low, kind of intermediate, right? It's not actually the significant one, but and then it broke again right at one, and then choppiness, and then came back down. So really choppy. I was not participating on any of that. I didn't want to participate on that. And then right there. So what is my bias for next week? So again, I'm going back down to this chart here, and it's unclear to me what's going on. We are below the 30-day simple moving average. We are below now the 10 simple day moving average. We are in the day opening day range in between 42.75 and 43.99. So if we go above next week, we go above 4,400, then I could probably bet that we are going to look for 4,600. This is probably a good area. Let me mark it down right here. Let me do one of these drawings. Let me open it. I mean, this is I really don't like to do this right, but I'm gonna do it. And this is not what I'm. So let me get that box right here. So if we are able to move away from 4,300, I would trail, yes, up to 4,600 before we move down. We have this downtrend right here off of these highs in 4,800, right to the right to the point almost, and then came back down, and then we have a low, and then a lower high, and then a lower low, and then now you were painting a higher a lower high. Now this candle here, if it closed below this 42.75, I would expect that this one is going to keep moving uh, below this level 41.03, and market could crash. Yeah. So let's see if we can do this. I'm gonna redraw this one as a channel. So this one could move to 4,000. Yeah, it depends on what happens in the market, and geopolitical problems today are kind of like heavy. So all right, so I'm gonna do only one video today, and I apologize if it's going to be too long, but I think that there's a good material to go through, and I'm taking the whole week there. So if you if you want to see, keep going, and if not, just revisit there. We are now at 53 minutes. It's going to be a long video. Okay, let's review gold. So I'm gonna change this one to gold. Let's wait for it to load, and let me show you. And I think I did already, but GC. So where we are in gold, it is kind of like a miss in gold for me, and I'm gonna explain you why. Um, so the market has been moving, or it was moving pretty horizontally all the way, came back down, made this market forecast touch to the in the 20 level, and then it started to move up. So we are bullish in all of this area, but the market really didn't make that much move. So it was lagging, but then and in here you do have a good reversal, or not reversal but continuation. You're pretty bullish on this one in the price action, and you know that probably people are looking for safety in gold. So with all the geopolitical problems, then would this would be probably a good instrument to cover yourself. So let's go and paint this one here. There's a break in that trend right there, right? So you have a lower low, a lower high right there, and then this one breaks in a very solid and a nice move to the upside with the market forecast moving to the upside and the MFI, the market flow index, also moving to the upside. So good volume, good MFC, and then this one started to move up. Now, March 1st, 1903 and 1952 is the range. So you see here we are above. Now we are in a bullish mode. Until when? Until it comes back down or and give us another sentiment. But my feeling is that we are bullish in gold. Okay, so let's see if this one loaded already, and let's look for the trades. So I'm gonna go back as I did before. Let's go back to March 1st. Okay, seems that we found March 1st. So the this area here is an area of pre-market, right? So a gold open at 820, but I have it marked here at 9 a.m. Um, just because the three markets I trade are different. So uh, ES opens at 9:30 Eastern. Um, Gold open at an 8:20. The Ghost pit opens at 8:20, and Crude opens at 9. So I think that I have this one marked for for ES actually. So at 8 a.m. I made this first trade. Market moves sometimes at 8 as well. So I'm alert at 8, but actually waiting for 8:20 to give me a trigger. Um, so let me go back to the first right here. Guys, if this video is too long, just visit it later and keep watching this, because there's good there's a good lesson here. Okay, so this is the first entry that I made in gold um, on March 1st, which was a Tuesday. So let me open it up. So market is moving to the upside. See in the anchor chart, you have all the moving averages stacking to the upside. There are some attempts to go back and touch these moving averages, but in general, it's moving to the upside. So bias is bullish. On Tuesday, we are still in the range zone, so it was moving down and up. Uh, but in general, the market is bullish, right? So I entered this one first out of the cloud, out of the Ichimoku cloud, two candles down and then bouncing, making a higher high and potentially breaking this double top right here. Okay, so I entered this one, and moved up, 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 and I entered at 1920.09, and it lost some energy here. So you see in another thing that I haven't talked that much. This one is the squeeze, and there was a here there was um, um, a green bar, and then it broke to the upside, but it didn't last that much. Went all the way up here and came back down. So I didn't it didn't meet the target, but it came down. So it's still, this one was good for $90 right here. So in between 1920.9 and 1921.8. So this one is I'm gonna mark it. Oops. This one is actually $90. Okay, so market keeps in the range right here, not doing that much, and then there is a break right there, right? So we have this pivot high right here, and if you go there, there was an up down move. Annoying as another annoying too, because you know you would be taking this one up here, and then um, probably if you take this break here, that one would be one stop. Then you take another one, that would be another stop, and then you take another one, and finally you would go up. So I did not take it, and so at 10 a.m., nothing there. Probably there was a good, indication of an entry here, but the squeeze was triggering short right here. So probably, a little bit more risky, but that's so. Then this one, there's actually no entry here unless you take this reversal, but we are below the cloud, so no entries there. And this is where I took the other entry. So um, this is a gamble, I guess, because it was bouncing off of the 89 EMA, and then breaking this above this candle right here. So this one, it was would be a second entry long. That is how they call it in the price action. But but I took it right there when it was breaking. So this one was all the way all the way to the target right there, and this one was $400. So let's mark it right there. So that is the trade I made on. That is a trade I made on Tuesday. Now this one here is a choppy area, right? So you could be very, very badly injured if you were trying to go long in all of this. Every single one of this would have been a loss. And then finally made a move to the downside, and then moving out of the cloud and breaking up here. I didn't take any of this, but this one is actually, if you see here, there's a previous day high, and that is what it was struggling. That the price was not convincing to move to the upside, and then finally it broke and then moved to the upside right here. And then after in at night, after hours, made another move and then came back down. Okay, so yeah, one trade right there, two trades, one for $400 and the other one for 490. So $490 for gold um, on Tuesday. Now let's look Wednesday the 2nd. Some trades there. 2nd. Okay, March 2nd. March 2nd, congestion. And look at this candle. I'm gonna keep bringing it back. So look at this candle. This is March 2nd. I guess that it is. March 3rd. March 2nd. Right there. So in the range, right there. So choppy. Okay. So let's see. So there's a lot of consolidation here in this area. Um, and I think that I extended a little bit too much on my trade. So let's go back here. Let's go to March 2nd. So this is the overnight price up here. Let me delete this one. March 2nd. So let's analyze this area where I did the trade. So you have overnight move to the downside and then trying to recover, a lot of choppiness right here, and then I was caught in there. So let's review the trades. March 2nd. Let me open here. Guys, again, I apologize, but I think that you can move the video forward, but I think that is worth it. So okay, so let me show you here. This I lost $520 on Wednesday. So again we are. Let me expand this one a little bit as well. So a lot of choppiness in this area, right? So what happened here? Took a trade, uh, when it was breaking the pivot, the floor pivot right there, and before that pivot high. So I was taking a risk, and probably a good entry would have been a little bit more riskier but safer at the same time, would have been to taking it above this one, right above that pivot high, or maybe this one here, because you have 1 2 3. Now this one is invalidated the previous one, so this one is a valid pivot. But anyways, I took it up above this pivot high, thinking that probably gold would have moved higher. But what it did was to go up and then came back down, right? And so I lost in this one $50. So I don't want to put a minus, but it was a minus. So $50 right there. Then we are above the pivot. So we are doing another attempt, and I took this one here again, and 90 from 1935.4, and it was sold at 1934, right there, down below here, right at this price right there. Now, that one was a loss as well, and minus for minus 140. Second trade on Wednesday, and now made another attempt, and I took this trade as well. I took it for 1935.4. Little bit stubborn, huh? Yes. So I took it, and then it was sold for a loss as well, at this price right here, 1934.13. So that one is another $110 down. minus 110. And so I was not doing good, right? And now you have now a painted double top, right? In this level, actually, all of this area was a um, significant resistance now, and then came back down, and then it started to break levels. So again, congestion here. I was not sure what was going on. Bullish. My sentiment was bullish in gold, um, and here I took a short entry thinking that this move was going to continue to the downside. All the moving averages are stacked a little bit a little bit extended actually, but you never know. I mean, market tries to trick you, and it tricked me. I thought that it was going to go down, and I took this break of this support right here after this move, and the market came back. You know, I had bearish um momentum, but if you see here, you have a low, then a lower low, and then you have a low and a higher low right here in the squeeze. So kind of similar, but higher anyways. And this one was significant price move already. So a good entry would have been there. A bad entry was actually this one because of the two um, squeezes. I mean the um, the squeeze was moving higher in here, so it was inviting congestion. So I took another loss, and this one was for 220. Um, so let's put minus 220 right there. So 520 loss in gold, and I thought, okay, this is enough for me in gold. I'm not going to make any more trades in gold. And and it was keep moving sideways down. There was good entries as well, but I was not. I mean, I made my losses already, so that's it. You know, you see here that my sentiment is up in gold, but the price action is moving down. So tricky. Okay, so let's go to um, let's review um, Thursday. Thursday, I didn't do any trades on gold. I don't know if it's. I'm not going to review it. Um, just I'm gonna go through. Tuesday was even more choppy, and the range, if you see here, I'm sorry, Thursday. If you see here, this range was very narrow, and within this previous day as well. So nothing there, but it gave a good push to the upside on the next day. So choppy, and I was, you know, done for gold. And then for the rest of the week, I didn't actually do any trades in gold. March 4th, which is the last day. Okay, let me see why I didn't take any of this, right? So market started, in the morning, a lot of choppiness. So I thought, okay, so there's gonna be pre-market is choppy. My assumption is that it was going to be a choppy day as another again, but then it started to move up. But look at this move. This move is really weird. Look at that. You don't have any entries here, right? Except for that, probably that reversal, but the moving averages are not helping you. They are not stuck to the upside. But then you have one move here for a stop, another one move here for another stop, probably a minimum um, minimum profits right here, right? So you have that one would be a minimum winner right here. Maybe this one would be better. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, this one is a target. And then you have another target here. So you could probably do well, but I thought, okay, lots of coming back to the 34. And then the good way to trade this one is to, you know, move the pivot or move the stop below the pivot right here, all the way up, and you have been stopped at this pivot right here. Okay, R3. So market started actually previous high, and this one is another you know value that it's important. Um, Market really wanted to go up and made a good move right there when the market opened. Came back, made another move, came back down above the previous high, made another move, and this one would, was the good one. I did not take any of this. Okay, so that is gold for the 3 days. So let me see 1 second. So gold was a whoopee $30 loss in this week. Without consider Monday, I don't remember if I traded. Yeah, I did have a loss on Monday, but from the first through the fourth, I made 30. I lost $30 plus commissions, and I did have 4 trades, 4 losers, and 2 winners. Okay, so let's review gold. I mean crude, and let me go back to crude right here, and then CL. And crude is on fire. Okay, so much on fire that I did not take any, or I took only few trades. So let's review. On Tuesday, I didn't take any trades. So let me show you. So this one is Tuesday the 1st, and it was a monster move, right? Um, what happened here is that the market moved overnight. So when news of war came up on Tuesday, this one, from 95 through 106, it's kind of like a monster move. So I thought the market moved already. I did not participate. I was sleeping, and I appreciate my resting time, but I lost. I did not win there. So let me see. Let's go to the first, second, the first. Okay. So market move right here all the way there and then came back down. And then I thought, okay, 101 from 96 is kind of like a good move already, and I did not participate anymore. I mean, I thought, the market already moved; it's not gonna move anymore, but it did, and then went all the way to 106 and then came back down. So that is what happened in the anchor chart. Lots of opportunities to participate though. I did not. Um, let's see crude. Give me 1 second. Excuse me. Okay, so let's go back to the second. Let's go back to the second. One more. Okay, so moves. Market and crude was really good. But did not participate that much in there. So let's see on here we have the second overnight move, you know, up, down. I mean, up, up, really nice moves. And then here, this is at 7:30. I was looking at the market here. There's a resistance one, and then move to the upside. Um, so there was plenty of time to take trades here, and I did not. Okay, so my bad. Then came back down, and then so no trades um, on Wednesday. No, one trade on Wednesday. So let me see. Let me see. Let's move here. It's annoying when when the market is moving nice and you kind of just looking at it and not making any decisions. This is tough. I mean, it's really tough for me. So here is where I make a decision, and it was a loss. So I saw that coming back down. Let me see what level it was is what it was breaking. Actually, it was breaking this one here, right? And I was a little bit premature, but it was breaking that pivot, double top right there. So I thought, okay, nice chance to move. 107, let's take it. I took it and came back down to me. So that one was $130 loss, minus 130, and that, I remember that gave me a feeling that okay, I'm not in here. I'm not tuned, so I'm not going to trade anymore. And that was probably a mistake because look at all of these moves. So there are some choppiness here, but overall there's a good move to the upside. Choppiness here. Nice move. This one actually, this is a classical um, continuation trade. So you get right there above this pivot. So you move to the upside. Lunch, some choppiness, and then moving higher. So this is where you have to look at the point and figure, right? So because you see in the point and figure here that there is really some choppiness here, and then there's a large move. So you never know when it's going to happen, when this one is going to happen, but they happen. So um, monster moves, and then came back down. Um, next day in on Thursday. Next day, let's see, Thursday, March. Let me see. Thursday, March 3rd. I took one trade right here. I mean, guys, there was money to make in gold. I mean, in crude, for sure. But you see all of this movement, you get paralyzed. Or that is what happened to me, right? There it is. A small gain. This is, and I remember this trade very vividly because right after, what happened? Oh my God. Sorry about that. And I'm not editing this video, I'm just going through. So um, if you see mistakes and all of that, it's because of that as well. So let me get that entry. What is this? What day is this? Fourth. I wanted the third. I saw the trade, I think. Yeah, this is March the 3rd. So let me see here. So this one is annoying. This one is annoying. Okay. I was preparing my entry right here. So I took this entry. I remember this one. This is crazy. So I took the entry right here off of that week out of this 34. And then the market reversed and then came back up. I was stopped. So this one is $80 minus 80. Okay. And then I think that at the same time I was looking at the other market, and then I didn't put the entry right here. And I saw it and the market just flew. I mean, it went boom, and it started to move crazy. Look at that. So 50, if you see the time right there, so this one it was at 8:51, 8:52, 8:53. I mean, it was moving like man, and I was not in there, and I lost all of this move. I would have taken this one, at least this one, the first one, because I remember that okay, I can take this one, but I didn't. So because of the $80 loss, and I was $500 already on Thursday in ES, so I was kind of like, okay, well, I don't want to really risk it, but it went moved down, and crude to the downside was kind of weird, right? But it moved. It moved all the way from 11, from 111 all the way down to 107. Choppiness and choppiness. So that was a Thursday, and I was frozen. And then choppiness, but the good targets here. This is um, I'm in the other day already. Okay, lot of choppiness in crude now. And then Friday the 4th, I took one trade right there. So again, you know, another one of those entries that it was good. I mean, you get some choppiness here, moving up. Moving averages are stacking to the upside, and this is a week out of the or a bounce of the 30 of the 89, and I took it right there, and then went move all the way there. So that one was $400 profit on 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 Friday. I'm on a market right there. Okay, so those are the trades I made. I mean, crude is crazy. I mean, it's moving so high that it's way above all my limits. So I'm not looking for longs on crude anymore. Even though people are saying, this one is going to go all the way to 140, 150. So, but I don't know, man. I mean, it's this monster move right here with this one as well. It's a little bit too extended for me. So even though I look at the lower time frame and I just should do scalping, so I think that at some point it's going to reverse. So I don't know what if I have to look at shorts or long. Probably I'm not that good at this thing. Okay, but anyways, uh, those are the trades on so Tuesday. Let's recap a little bit. So Tuesday, the first, I lost $297. Wednesday, the second, I lost $250. Then on Thursday, I made $420, so positive that one. And then on Friday, I made $900. So, and that one was two trades, two winning trades. ES for 500 and crude for 400. Guys, I hope you follow me. Sorry about the extension of this. Again, please subscribe. If I get 1,000 subscribers, I am going to start doing live broadcasts, so I can start. I do have enough people that would be interested in this. So please subscribe, and if you like this video, just smash. That is how they say it, right? Smash the like button, and I hope you like it. And it was a little bit extended, 1 hour and 32 minutes. Hopefully, it is helpful for you. And if you want to learn about more Renko traits and setups, let me know and put it in the comments. I would be willing to respond to your questions and transfer a little bit of what I know. Okay, so thank you so much, and have a great rest of the weekend.